Rumble was founded in October 2013 by Chris Pavlovski. It was an alternative to YouTube for independent content creators. Pavlovski founded the platform after seeing that Google was prioritizing influencers on YouTube and not independent content creators. I, for one, had never heard of Rumble until around 2021-22, which is about when it blew up. Monthly visitors rose from 1.6 million in 2020 to 31.9 million in 2021. In the first 9 months of 2021, Rumble generated more than 6.5 million in revenue, mostly from advertisements, although it was not profitable yet. Rumble became a publicly traded company in September 2022, trading under the stock ticker RUM on the NASDAQ, after merging with a Special Purpose Acquisition Company, or SPAC. A Special Purpose Acquisition Company is also known as a blank check company. It's a shell corporation listed on the stock exchange with the purpose of acquiring or merging with a private company, thus making the private company public without going through the initial public offering process, the IPO, which often carries significant procedural and regulatory burdens. Rumble's stock price started 2023 at $8.53, and today it's traded somewhere around $4.69. So the price decreased by about 45% from the beginning of the year. And this is pretty predictable if you look at Rumble's ownership structure. The kind of drop it's pretty common around SPAC stocks. It's because the stock is held by these early investors, and it's locked to prevent the insiders from hyping up the stock to retail investors early and then dumping their positions to make a profit. Because of this, the retail investor owns very little of the overall shares of the company to begin with for that first year. And when the lockup period ends, there's an immense selling pressure at that price point for the initial investors to dump their shares. And then when that happens, the retail market is flooded with new shares, which drive the price down, especially if the demand is not high enough, which is again common among these types of stocks. Of course, that doesn't mean the insiders will always sell when they're able to. They could hold it forever if they choose to. And in Rumble's case, the founder and CEO, Chris Pavlovski, he's apparently in his 30s, and he owns 45% of Rumble's Class A shares, meaning he can be with the company for a very long time and just keep holding onto his stake for years. And since investors can't know for certain what he'll do with the company and if he'll dump that huge position that he has, it makes sense that the stock took a dip when that 1 year mark hit. But it's also important to focus on the business side of Rumble. It has over $300 million to work with since going public, but at just about an $18 million annual return rate run, the company has a lot of work to do to grow its lofty multi-billion-dollar valuation. The company's massive spending on content creators has not resulted in significantly higher usage or revenues. In Q3, they announced a 64% year-over-year revenue increase to $18 million, driven by higher advertising and licensing revenue. The company also reported 58 million to average monthly users and 10.7 billion average estimated minutes watched per month, along with a few other key highlights for their financial data. To put that viewership in perspective though, YouTube is the second most viewed site in the world behind Google, and YouTube averages over 1 billion hours of viewership per day, which means YouTube gets more views per day than Rumble's getting per month. That also means there's a huge market to tap into if Rumble can siphon off more views and minutes viewed from the giant that is YouTube. The recent launch of the Rumble Cloud helped, and they were able to secure live streams for the Republican primary debates, which contributed to the company's strong performance in Q3. Recently, some advertisers have pulled from Rumble though, due to the site being seen as a place for the alt-right movement, and an entire saga of Russell Brand didn't help. But Rumble as a whole will probably outlast this hiccup. And then there was the rumor that the Rumble CEO, Chris Pavlovski, didn't live up to his claims that he wouldn't sell his company stock when the lockup lifted. Yes, there was a Form 4 filing with the Securities and Exchange Commission published on September 19th that showed Pavlovski deposited more than 196,000 shares of Rumble stock on September 16th at the price of $6.79 per share. The executive still owns roughly 140 million shares of company stock though, so the disclosure looks largely insignificant. Nevertheless, it is possible that the disposal caught shareholders off guard, and the word of his sale caused panic amongst some of the stockholders. What I'm reading is that he was actually selling to cover the tax liability for some of his shares. And it's safe to assume that the big dip in the price with Rumble was the insiders selling significant amounts of the stock following the lockup expiration. Overall, Rumble is forecasted to break even in 2025, but the stock remains risky due to the high cash burn and the inability to monetize users efficiently. The company has $267 million cash balance, but the cash burn rate is high, and Rumble is guiding those creator commitments to significantly decrease in 2024 with the goal of reaching a break-even in 2025. The Q3 2023 cash burn was roughly $30 million, so the company will need to cut the burn rate quickly to reduce the risk of exponential capital raise below $5. The consensus estimate are the revenue growth rates will approach 100% in 2024, making the stock appealing. Ultimately, though, the stock remains risky due to this cash burn rate. And if the company doesn't ramp up monetization levels and further grow users, Rumble will face massive issues with the inability to monetize users at levels comparable to other platforms, leaving only a few select content creators focused on this online video platform. Personally, I feel like the website and the app could use a little bit more work to be user-friendly. I mean, maybe I'm just really biased because I use YouTube all the time, so it's weird to use another video app. At the end of the day, the key investor takeaway here is that Rumble stock is a semi-attractive risk/reward investment under $5. The company has built up an online video sharing platform to start monetizing users at higher levels in 2024 to reduce the need for minimum payment guarantees. The stock has substantial upside once this switch is flipped, but the risk still exists that Rumble might never reach this level and cash burn becomes a major issue. So at this end, it's a risk. It's not a sure thing, but for under $4, it's probably worth the risk.